Hello and welcome to another MCO update on FETCH.AI. The FET chart is in the midst of its correction and is on its way to this B wave support area, as it seems, which should then be followed after the B wave is complete, should be followed by a C wave to the upside, which should complete a larger A wave. Talked about the structure to new highs before and that it's likely going to unfold as an ABC structure. For now, however, we prefer to take it level by level, and we are going to focus here on the initial ABC structure first. So once we have that B wave completed, most likely in this support area, ideally in the support area, we should see an initial 5 wave move up, which should be part of wave C. So quick explanation from this swing low that formed in April at around 35 cents. We've seen obviously 5 waves up, which is why we're overall looking for higher prices. But obviously a market doesn't move up in a straight line. So let's say after getting an initial 5 wave move up, we would typically expect a 3 wave corrective pullback. In this case, A wave, B wave, C wave. And then after the 3 waves down, we would get another 5 wave move up. 1, 2, 3, 4, 5. And this 1, 2 setup, the initial 5 up, 3 down move of the C wave, would serve as confirmation that the correction is indeed over. Important is though that to keep this perspective alive and to keep the focus on overall higher prices, well, it would really be ideal if the price could hold above that 42 cent level. So we really want the price to hold above that 78.6 retracement. That would in fact be ideal, because any break below 42.2 cents to be exact would be actually too deep for a B wave. I mean, it can still be a B wave, but at that point it will become more probable that the overall structure is breaking and that the wave 4 larger degree never bottomed, and that the move up isn't really bullish, and that this to the downside would be more than simply a corrective pullback in an uptrend. But for now, yes, we want this correction to be finished, but then we are looking for higher prices. That's at least my take, but it's not guaranteed, right? So that's why we have to pay attention to these levels. And again, they are 42.2 cents, 49.7, 55.8, and 62.6. Now, if we study the move to the downside in more detail from this swing high that formed on Friday, obviously a C wave down, wave C, should be a 5 wave decline in this case. 1, 2, 3, 4, 5. And we might even be still in the internal third wave. So the price should be in the mid to late stages of this third wave. And this third wave, based on how the microstructure looks, could also be 5 waves. So waiting for another bounce, lower high, another lower low, another lower high, and another lower low. The current resistance is between 75 cents and 80.9 cents. Why is that important? Because to keep the pressure downward, the price would need to stay below that 80.9 cent level. And it's just a pattern it's currently following. It's a pattern. So it can break out of this pattern. When does it do that? Well, that would be above 80.9 cents. Just important to understand the implications of that level. It would mean that something less bearish is playing out, maybe something more directly bullish, because the price might then not follow the direct pathway lower. Now, this is not really an overall bearish analysis. It's just a corrective pullback in a larger uptrend. That's still how I see it. So that should give you the relevant parameters here for the weekend. Bear in mind, one more thing to say, price is now approaching the previous swing lows from the 19th and the 20th of May. It is an area where buyers turned up before. Okay, so all I'm saying is there might be a bounce from here, maybe this wave 4, there's a slim chance this is already the larger degree 4th wave, but we will study the micro action quite closely over the coming sessions. So I'll keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye. Bye-bye.